Recording now. Hello, this is Grant Inaba, my partner agent Darman Trokit, and we are here to talk about loans in the real estate market. Loans you're going to need if you're purchasing a house with financing. Basically, there's two ways to purchase a house. There's one with cash, all cash, which basically it's just like it is. You know, you take out all the dollar bills in your bank account and you go ahead and shove them in the direction of the seller and say, I want to pay everything in cold hard money. Not a lot of people can do that, especially in this expensive real estate market. So there's also an alternative, that is purchasing with financing or purchasing with a home loan or a home mortgage. These are basically all kind of synonyms for the same thing. There's lots of different types of loans out there these days, especially. Back in the day, home prices were a lot more reasonable, we should say, affordable. And back then, there was really this idea that it was a very standard idea that you would have to purchase a house with 20% down and then be able to get a nice, easy, regular conventional loan in order to help pay for the balance of that and cash that you might not have. But these days, I think, loan companies, they've gotten more competitive as well, so they want to kind of try and, provide a little bit more than the next person is in order to capture business. So what we're seeing actually now is a lot more competitive loan packages out there. And that's a good thing for our consumers because now they have different things to choose from in terms of getting loan financing, but also a lot of different custom tailored home loans out there in order to assist our home buyers. There's everything from a low down payment loan, which is going to be less than the 20% that's normally required. There's also credit programs, loan programs out there for people with low credit scores. If you've got a kind of a substandard or a below, what the standard credit score is for a loan qualification, and then there's special credit loan programs out there. There's also a lot of mortgage lenders that will go ahead and assist you with trying to bring your credit score up in order to try and then qualify for a loan, a standard loan. There's also loans that help with closing costs. Closing costs in our market, they're usually about 3% or so. And, sometimes that's a rather significant amount of money in order to purchase a home. So there's loan programs out there that actually will sometimes create a second lien or a second loan in order to help you be able to purchase the house and with the closing cost credits that you might not have. So these are some kind of basic ones. And then let's kind of go over, what we see standard in the market these days. Back in the day, like I said, we used to see a lot of people purchasing with 20% down. That's really not the case anymore. A lot of times actually there's people that are purchasing with much less. Your standard FHA loan will allow you to, and that's an FHA loan issued by the Federal Housing Authority. It's not a first-time home. It's not a first-time home buyer program. It's actually one that if you haven't bought a house in 3 years, then you can go ahead and be able to qualify for this loan. Mm-hmm. And you can qualify for 3.5% down.
Yeah, I think, the more people I talk to, it's pretty kind of recurring thing that I hear is they're surprised that, they're qualified to buy a home, either from not having like the really down payment or not having, the funds, still being able to work out on the program. It's pretty interesting.
Yeah, exactly. These days, when we're talking about a high home price, we're also talking about a high down payment. And, on $1 million house, if you don't have the $200,000 in order to purchase the house, then, you're kind of out of luck. So FHA programs, they're definitely very beneficial out there for you that don't have a lot of cash in your bank account, that want to buy a house and, need a loan that's going to accommodate a lower down payment. Mm-hmm. There's also conventional
as well, yeah.
Mm-hmm. There's also conventional loans out there as well that different conventional loans, depending on the bank or depending on the mortgage institution, they have different loan products that allow you to purchase a house with a down payment anywhere from 20% to, I've seen also 0%. I've also even seen ones at 3% and 3.5%. So, those also might be able to match, what an FHA loan package might be able to offer as well. And we can talk about FHA loans being, kind of a federal backed loan package, but there's also state and municipal loan packages as well. Two common state packages here in the California area that I'm thinking about are Cal HFA, where Cal HFA will actually help you purchase with a down payment assistance, where they actually give you cash or loan you cash, I should say. And then there's also Cal HFA that will assist you with closing costs as well. So these are great programs. I've used them many times before with clients, and these packages are a great asset to home buyers in the California market, because they actually operate like a conventional loan and not like an FHA loan, but they give a whole lot more, in my opinion. So they really, really help out our buyers in a big way. This is definitely for a first-time home buyer, entry-level buyer buying their first home, usually a lot of working class type of people that apply as well. So this is really a good stepping stone loan in order to get people into their first house.
Mm-hmm.
From there, start building equity, and then be able to have enough financial wealth to inside their house in order to have the equity to maybe step up into a normal house, or also refinance into a regular loan. So that's Cal HFA. Another one is GSFA, Golden State Financial Assistance, which is a loan very, very similar to Cal HFA. Almost works in the exact same way, just provided by a different, I think it's a different private institution, if I'm not correct. You might want to correct me on that if anyone is out there that's listening to this. If you can provide a little more clarification, but that's another loan out there that I've heard of that will assist people.
Yeah, I haven't really heard of that one before.
Yeah. On the municipal level, there's local county and city loan assistance programs as well. One that I'm thinking about in the Oakland area is the Oakland MAP program, Mortgage Assistance Program. There's a lot of different restrictions that a lot of these, government programs have. So you want to look into them, make sure that they work for you. The Oakland MAP program, I think you have to use a longer close of escrow timeline, and so that can sometimes be an issue in a competitive market. The reason why is there's a little bit of extra red tape. They need a little bit of time in order to be able to process all the paperwork and make sure that everything's correct with the financial assistance they're providing. So these are some of the more basic loans out there that I can think about. Let's go into a little bit of terminology. There's jumbo loans, which are what we call non-conforming loans. And then there's conforming loans, which are basically, loans that, kind of are regular, I should say jumbo loans are considered, kind of higher price point, higher class loans, whereas regular conforming loans are what we call kind of, normal run-of-the-mill loans. And really what there is there's kind of a lending limit between, conforming and non-conforming. It's set by the Federal Housing Authority. It fluctuates at times, and also in different markets as well. Different cities have different kind of standard of living, and the conforming rate or the conforming loan limits are actually based on that. It's usually around 600,000 to 700,000 or so, especially in the Alameda, kind of area market that we work in. I do see it much lower in, Vallejo areas like that. But what it is that it's basically the government will back any of these conforming loans, any of these loans under this specific price point, but A jumbo loan or a non-conforming loan is a loan that they will not really, back completely. So it's more of a privatized type of loan. We call these jumbo loans because they're just bigger, more amount of money than a regular conforming loan would be.
Are those limits tied to, because I know FHA also puts out limits in terms of like their qualification or standards on how much they will be, approved for based on the county.
Mhm.
Are those limits tied at all to these, or are those kind of separate?
So that's pretty much exactly what we're talking about.
I
Yeah.
see.
Uh-huh. So then the jumbo loans are really just loans that, and also the thing that we should talk about too is when we're talking about the difference, we should talk about the actual parameters of the loan. Jumbo loans usually have a much higher interest rate, and they're actually much more difficult to attain. They're much less available sometimes too as well. Uh,
Mhm.
so if you're going to be, purchasing above that, kind of $600,000, $700,000 threshold,
Mhm.
then you're going to have a little bit more difficult time qualifying. However, people that usually are qualifying with these types of loans, they have a little bit more equity, a little bit more financial stability, a little bit more financial resources.
Mhm.
So a lot of times that can kind of offset any type of bureaucratic difficulty there is applying for these loans.
Yeah, because I mean, you don't want to confuse the purchase price with the home loan amount. Those are two separate. Because if you're purchasing a house for let's say 800, if your down payment ends up being 100K or something, it could still qualify for these loans as well.
That's right. That's a very good point. Yeah. So when we're talking about the loan limit, we're talking about the actual loan on the house, not the purchase price, which could be more. Yeah. Mhm.
Hmm.
Especially if you're putting in 20% down, then you're talking about maybe tens of or hundreds of $1,000 as opposed to the lesser amount, which would be the home loan amount. Yeah. hmm Yeah. So these are, for the most part, the different loans and the different categories of loans that we use out here in order to purchase properties and assist our clients purchase properties in California and especially the Bay Area. Are there any loans that I'm missing, or any that you've heard about that out there?
I was thinking about was construction loans. I'm hearing kind of some options, especially on those kind of rundown properties. I think is it a 203K FHA loan as well?
That's right.
Um,
Yeah. So we
so
have.
I don't, today's market, I don't know how frequent those are because obviously a lot of lenders are kind of pulling back on the limits and kind of making it a little bit more hard to get loans. So these, I think, traditionally have been more harder to attain. So I don't, in today's market, I don't know if you have experience with those today's market.
Yeah, that's a very good point. Yeah, with the quarantine, a lot of these loans actually are not available. These more specialized loans. I think actually uh, at one point, like bridge loans, things like that. And I guess actually those are loans we should talk about as well later on. Um, yeah, the more kind of complex or more specialized loans, they actually disappeared during the kind of this recent mortgage instability we've had during the quarantine. Um, I'm not quite sure if 203K loans are available right now or not. I think we should probably assume that they are, but we should also assume that um, they're not very widely used. And in fact, I think the last time I used one was maybe somewhere around 2014 or so. And the market was actually still rising at that point. We're still kind of getting out of foreclosures as well. So there was still a lot of distressed properties that were coming onto the market that we had this opportunity. And also the um, market was not as heavy or competitive. So we had the flexibility to be able to use these loans. What they do is they allow someone to buy a distressed property that you could not normally move into right away and start living in, and they actually loan a separate amount of money in addition to the purchase of the loan to be able to renovate your property. The great thing is too is that when the property is appraised, in order to be able to purchase the property, it's actually appraised at the finished value as opposed to the previous distressed value.
Hmm.
However, the loan requires you to actually do that renovation work during escrow. So it's a little bit risky because you don't know whether or not you can meet that timeline, or a lot of times the budget as well. You got to make sure you have a good contractor that can be able to safely build the property within a certain amount of budget that you have. If not, then there could be some problems there. But yeah, it's a great loan. If only we were working in a much slower or relaxed market, we could definitely use it more often. Um, and there's also, on the conventional side, there's conventional renovation loans as well. So you've got the FHA 203K loan, and you've got conventional renovation loans as well. Not too common, but definitely loans that we should mention. Thank you.
Yeah. Yeah, it seems like, in today's kind of competitive market, a lot of times, your entry level, you kind of have to get a little more creative to, be able to still be able to purchase something.
Yeah.
But yeah, lots of options out there.
Yeah. One thing I went over, or I mentioned real quickly, that I guess we can circle back and talk about right now, to our bridge loans. So bridge loans are loans for people that actually own a property already and are usually living inside their property. And what it does is it helps you as a seller, if you want to buy another house, maybe a bigger house, or whatever, maybe a house in a different location for your job, things like that. If you've got a good amount of equity built up in the house that you currently live in, you currently own, then you can actually take that equity that you earned in your home that you're living in and be able to apply it to the purchase of the property that you're going to. And that's in the form of the down payment. So it's kind of like down payment assistance using the equity in your house that you already have. I have heard lately that the charges for these loans are pretty high, just because you kind of got to do, it's almost like doing, well, not really, but it's almost like dealing with two transactions at one time, two purchases at one time. And I believe that might be where the extra fees come from. I'm not quite sure, but I've heard that there's a large amount of fees out there.
And that still results, I guess, in a kind of a contingent offer on their purchasing.
Yeah, exactly. Yeah. So on the real estate side, we would be doing basically a seller purchasing a property contingent upon the sale of their own property. Yeah. Oh, one other one that we forgot: VA loans. So veterans assistance loans. These are basically loans that allow military service or retired military to be able to qualify for these very special loans that help applicants purchase a property without any kind of down payment. So obviously, you could see how that would be a very big benefit in this market. However, there's a couple of things about VA loans. You should still put down some kind of a down payment or deposit anyway, because then it shows to the seller on the other side that you are willing to try and purchase this property in good faith. So even though that program exists, you should still try and think about actually putting a down payment down. The other thing as well is that the VA loan has much more stricter guidelines on the condition of the property. So there can't be any kind of, or I should say, a standard loan, requires the applicant to basically be approved to purchase a house that is move-in ready, or to a certain standard of readiness to be able to move in, live in the property right away. And the idea is that if you live in the property right away, you'll be paying the mortgage right away also. So most all loans require that you have a working kitchen, a working bathroom, no presence of mold. But with the case of a VA loan as well, you need to have a clear pest report. And that is basically a house that has a report that has no issues of wood rot, wood fungus, presence of termites, presence of mice, things like that. So it needs to have a clear pest report, and it also needs to have property that does not have any visible chipping paint. And the reason there is because they don't want you to possibly have, lead paint chips lying around the house, and that, someone could somehow be exposed to or ingest or things like that.
Mhm.
So, out here in our market, we've got some, pretty old houses. So, definitely something to be concerned about with VA loans as well. But in general, VA loans, we don't actually use them too often, even though we do have a lot of, military out here. They're just, they're very difficult to use in a very competitive market, and you can see why.
Mhm. Yeah.
They don't really make it super advantageous to be able to assist our buyers purchasing a property.
Yeah, I mean, you want to have some confidence when you're selling the property that, the loan is going to go through, and then, obviously not having kind of a, you know, much skin in the game, as a buyer with no down payment. It's hard to, make sure that this is a great, purchasing offer. That
Exactly.
you're confident in, yeah.
Exactly. Yeah. Yeah. Um, Man, I'm trying to think of any other loans that we're missing here.
Sure, there's some out there. It seems like there's just so many. Yeah.
I think we got most all the highlights. These are all definitely the most common ones, and I'd love to see more comments if you have any about loans that we might be missing, or loans that you've heard of, and we can try and maybe create more episodes in the future and talk about the specifics of those loans, and keep this conversation going. This is pretty much the basics, though, and we'll try and create some more content for you in order to help you learn more about the basics of other parts of real estate as well. So tune in for those, and we'll see you later. All right. Thanks so much.
Thanks.